Good evening to each and everyone. When we try to analyze the financial statements of any listed company, in the statement of profit and loss account, we'll be encountering the term called deferred taxes. Today, our topic of discussion is deferred taxes. Before starting the basic concept of deferred tax, let me show you the deferred taxes in the statement of profit and loss account from the Tata Motors Limited, from the financial statements of Tata Motors Limited. Let me share the screen. Yeah. Now, this is the statement of profit and loss account, one of the components of financial statement, and this is the balance sheet, another component of financial statements. This financial statements for the financial year 23-24 of the company Tata Motors Limited. As you can observe, we have total revenue from operations and also total expenses has been recognized in the profit and loss account. Then also you can observe that profit before taxes, and we under that profit before taxes we have tax expense which are divided into two: current tax and deferred tax. This deferred tax is all about we have discussions today. Okay, so the current tax is very simple. Current tax, the income tax expense of the company for that particular period. That means 114 crores is the income tax expense of Tata Motors Limited for the financial year 23-24. Okay, so this is briefly about current tax and deferred tax presentation in the financial statements. Let's try to dive into the basics of the deferred taxes. Let me present the screen. Yes. Yes. Yeah. Okay. So now, first of all, let's see the meaning of the deferred tax. Let's find out the meaning of the deferred taxes. What is the meaning of the deferred taxes? Recognizing the tax effect, the tax effect on differences. That means only on differences it recognizes the tax effect. Okay. What is the on whom differences, on whose differences? The differences on accounting profit and the differences on taxable profit. Accounting profit is also called as accounting income, and taxable profit is also called as taxable income. Okay. So deferred tax, the straightforward meaning of the deferred tax is to tax effect you have to recognize on the differences. Okay. Tax effect you have to recognize on the differences. Okay. Between the accounting income and taxable income. Let's see the what is the meaning of accounting profit. Okay, accounting profit is as simple as net profit shown in the profit and loss account. That means if you want me to show the accounting profit in the statement of profit and loss account of Tata Motors Limited, which we have discussed earlier, let me show that. Let me show the yes. So here, statement of profit and loss account of Tata Motors for the year 23-24. The accounting profit, this is the accounting profit. This is the accounting profit. This is the accounting profit. Let me color it. Okay. So that means accounting profit is as simply you can find in the statement of profit and loss account. Okay. And also I can call this accounting profit, and also I can call this accounting profit as profit as per books. I can call this accounting profit as book profit. I can call this accounting profit as book profit. Okay. That means profit and loss account, if you go back side, okay, if you go to back forward, it came from trial balance came from ledger came from journals. All these are books of accounts. So that I can comfortably call this accounting profit as book profit. Okay. And I can also say that accounting profit is derived as per the provisions, okay, has been derived as per the provisions of Companies Act 2013. Okay. So what happens? Tata Motors Limited is a limited company incorporated under the Companies Act. That means Tata Motors Limited has to abide the provisions specified in the Companies Act from all the aspects. Whatever it do, it has to abide the provisions which are specified in the Companies Act. That means while preparing the books also, it has to follow the company's rules and regulations. That means Companies Act rules and regulations. So I can even say that accounting profit has been derived from the provisions of Companies Act 2013. Okay, fine. This accounting profit, based on this accounting profit, investors will take the decision. Okay, based on accounting profit, investors will take the decision. Now, Tata Motors, that is the information. Those financial statements are publicly available. Based on those financial statements, investor like me and you can take the decisions. Okay? Yes. If you want me to show one example, profit and loss account of some X Limited, 100 lakhs for the 23-24, expense is 50 lakhs, net profit is 50 lakhs. This net profit 50 lakh is called as accounting profit or book profit. This accounting profit or book profit. So this is all about accounting profit. This is all about accounting profit. Now let's discuss about the taxable profit. Now let's discuss about the taxable profit. Let me share the screen for the same. Taxable profit. Yes. I believe everyone are able to look at the screen. As we all knows that income tax will be paid on profits. Yes. Everyone knows about it. Income tax will be paid on profits. Okay. For individuals, what individuals like you and me will do? Okay, when we go for the salary, when we go for the job, we'll get a salary. On the salary, we'll apply the slab rates. We'll apply the slab rates. What companies does? Companies do business. They get profits. On the profits, they apply the flat rates, not the slab rates. Okay. They apply the flat rate. Flat rate means was straightforward one rate, 30% or 25% like that. Straightforward rate. Okay. So that is called as flat rate. That means when companies earn the profit, they have to pay the taxes. That is called as income tax. Okay. So now this income tax payment has been governed by separate act called Income Tax Act 1961. Okay. When you maintain the books of accounts, at that time, which act you will apply? Okay, let me write here. When you prepare the books of accounts, when you prepare the books of accounts, when you prepare the financial statements like P&L, balance sheet, cash flow statements, when you prepare this, which act applies? Companies Act 2013. Okay, Companies Act 2013 applies. It includes Indian generally accepted accounting principles plus accounting standards or IFRS, International Financial Reporting Standards, which are called as converged into Ind AS. Okay. So this, when you prepare the books of accounts, you have to follow separate act. That is called as Companies Act. Okay. When you make the payment of taxes, okay, when you pay taxes, companies, same company, when they prepare books, they have to follow Companies Act. Same company, when they pay taxes, they have to follow the Income Tax Act. You know, Income Tax Act. That means, unfortunately, any company in India has to follow the two acts. One is for companies maintenance of books. Okay, that is for the purpose of investors, to provide the information to investors, and one is for the payment of taxes. One is for the payment of taxes. Okay. Now, in our previous example, X Limited has earned a profit of 50 lakhs. We all seen that We have all seen that here. What is the profit? Here, what is the profit? 50 lakhs. Here, what is the profit? 50 lakhs. Now, above net profit is there, no? That will not be useful for tax payment purpose. This 50 lakhs will not be useful for tax payment purpose. You all knows the reason, because this 50 lakhs has been derived from Companies Act, not from the income tax. Okay, but the tax rate, you got it from the income tax. Okay, this is the reason why we need to determine the taxable profit. This is the reason why we need to determine the taxable profit. The one and only purpose of taxable profit is to calculate the income tax. Okay, yes. Now, let us finally understand the overall summary between accounting profit, overall summary of accounting income or taxable income. Okay, accounting income and taxable income. Is it? Yes. Accounting profit based on Companies Act, taxable profit based on Income Tax Act. Accounting profit highly available in public domain. Yes, it is highly available in public domain. Just now I have, able to access the Tata Motors. Okay, that is the accounting information. Okay, whether can I able to access the tax information? No, it is highly confidential. Okay, the purpose of accounting information is to provide the true and fair view of information to stakeholders so that they can make the decisions. The purpose of taxable profit is only to calculate the income taxes. Accounting profit is not useful for tax calculation. That is the reason why we have to prepare the taxable profit. Okay, it is highly useful for tax calculations. Okay, yes. Now let's take one example to understand the example of deferred taxes calculation. Example of deferred tax calculation. Okay. Yes. Now let me share the screen to see the example of deferred tax calculation. How we have to calculate the deferred taxes. Okay, now let's take an imaginary company X Limited for the period 23-24. Revenues are 100 lakhs, expenses are 50 lakhs, profit before tax is 50 lakhs. Okay. So this profit before tax is also called as accounting profit or accounting income. Okay. Now let me come to the point. This is the profit before taxes. These are the income taxes. Profit before tax reduced by income tax will be profit after tax. Okay. Now let's calculate the current taxes. Current taxes means the taxes for the particular year which needs to be paid to the income tax department. Okay. For that, what you want? You want tax rate. Let us assume the tax rate applicable for X Limited is 30% and taxable profit. Okay. So the need of taxable profit, we already seen the need of the taxable profit is the tax for the purpose of tax calculation. This 50 lakh will not be useful, unfortunately, for tax payment. Okay. Now what happens? Current tax, the rate is 30%. You apply the rate on taxable profit, you will get 7.5 lakh. Okay. This 7.5 lakh, that means 7 lakh 50,000 is the income tax expense. Okay, 7 lakh 50,000 is the income tax expense of the particular period for that particular company. That 7 lakh 50,000 needs to be paid to the government income tax department. Is it? Yes. Now, the most important thing. Now, if you observe this 100 lakhs expenses 50 lakh and the profit before taxes, the profit before tax 50 lakhs has been prepared in accordance with Companies Act 2030. This 7.5 lakh has been prepared in accordance with Income Tax Act 1961. Here, see, it is violating, it is violating the which concept? Matching concept in account. It is violating the matching concept. That means expenses and revenue should be having the relation. Here, revenue and expense having relation. Profit before taxes also having relation. But current tax does not have any relation because this 7.5 lakh is not belong to the 50 lakh. The 7.5 lakh belongs to this 25 lakhs. That's why to make the matching, we have introduced the concept called deferred tax. We have introduced the concept called deferred tax. What is the deferred tax? Deferred tax means tax effect. Deferred tax means tax effect on differences between accounting profit 50 lakhs and taxable profit 25 lakhs. What is the difference, brothers? 25 lakhs. Difference is 25 lakhs. Okay, what is the tax effect on 25 lakh? Tax effect is 30%. Tax effect is 7 lakh 50,000. Okay. Now, I am writing here 7 lakh 50,000. I am writing here 7 lakh 50,000. So, overall 50 lakh minus 15 lakh is the 35 lakhs. Now, it is getting matched. So, if you apply directly 50 lakh, 30% on 50 lakh, you will get 15 lakhs. Okay. Same way we have this 7 lakh 50,000 altogether came from another planet. This 7 lakh 50,000 we have adjusted. So overall we got 15 lakhs, which is matching. Okay. Now look at the situation. We have to identify two things, whether the resultant deferred tax will be deferred tax asset or deferred tax liability. Okay. Now in the current situation, how much is the accounting profit? 50 lakhs. How much is the taxable profit? 25 lakhs. Accounting profit is more than taxable profit. That means now you pay tax, less tax. Now you pay less tax. Future you pay more tax. That means in future you may require to pay more tax. That's why I'm creating the liability. Okay. That's why I'm creating the liability in the current situation. Okay. The entry would be for deferred tax liability. Since you have to pay in future more, I am creating it as liability. The entry would be deferred tax expense, P&L account, debit 7.5 lakh to deferred tax liability, balance sheet, credit 7.5 lakhs. The entry for deferred tax asset would be deferred tax income, P&L account to deferred tax. One second. The entry for the deferred tax asset would be deferred tax asset, deferred tax asset in balance sheet to deferred tax income in P&L. This would be the debit and this would be the credit. In the current situation, this has came. The first entry has came. For tax liability has came. Deferred tax asset, we may find in some other situations. So this is all about deferred tax concept. Okay. And one more important concept, one more important point to be noted. Accounting profit in our example is 50 lakhs. Taxable profit in our example is 25 lakhs. We may get a doubt why these profits are getting differences. Okay, what made these profits differences? So this we can see and understand in the further coming classes because there are some items which are making differences to this. Okay, so under Companies Act, for one particular item, the treatment is different. Under the Income Tax Act, particular item treatment is different. That's why the differences are arising. We can discuss this concept in forthcoming classes. Thank you. Now let me try to show the same from the PPTs. Yes. So deferred taxes, accounting income versus taxable income. Yes, we all know that these are two different things. Taxable income is just for the purpose of tax calculation purpose. This taxable income, how to derive this, we'll be understanding from profits or gains from business and professions under Income Tax Act. Okay. Now accounting income, we all knows that this information is publicly available, and this information has been prepared in accordance with the Companies Act 2013 and Indian Generally Accepted Accounting Principles. Okay. Now see here, we have already discussed this also. If your book profit is higher than the taxable profit, that means you have paid less tax now. In future, you may require to pay more taxes. We have to create deferred tax liability. We have already seen the entry for this. If book profit is less than tax profit, means you have paid more taxes. In future, you will pay less taxes. That's why, since you are paying less money in future, that means future inflow outflow will be reduced. That means it is an asset to us. So now this is for this also we have seen the entry. So this is all about the deferred taxes. Basically, in one line, it has been designed to match the it has been designed to match the gap, to fulfill the gap created by two laws in the business. What are those two laws? One is, while maintaining the books Companies Act, while preparing the taxes Income Tax Act, to fulfill the gap, to close the gap, they have created one fictitious thing called deferred tax. I hope you all have enjoyed and learned from this. Thank you.